The update first to Greece's efforts to get its finances back on track.
Yes, hi there, Cyril. Hi there, everyone. Greece says it's preparing an historic return to international debt markets. It's widely expected to sell 5-year bonds to raise around €2 billion, and it could do so as soon as Thursday. It's been 4 years since the Greek government last ventured into the bond markets. In between, Greece has had to rely on 2 bailout programs from the European Union and the International Monetary Fund. But even as the planned bond sale marks a turning point, there's a long road ahead for the Greek economy, as Delano de Souza explains.
A nationwide anti-austerity protest brought Greece to a standstill on Wednesday. Protesters are increasingly frustrated that their lives aren't improving in spite of economic conditions picking up. The latest demonstration comes on the eve of Greece issuing its first bond in 4 years.
What they say about growth and returning to the markets, for us, the employees, it will not bring anything new. We don't trust this, and we don't have any hopes.
Greece has been kept afloat with a €218 billion bailout package from the EU and IMF. And in spite of the country's return to the international bond markets, the Greek economy remains fragile. Unemployment remains stubbornly high at around 28%. Newly released data indicates that after 6 years in recession, the economy could be turning a corner. Industrial production for February was up 1.7% versus last year, up for the third straight month. But economists warn it'll take time to turn fledgling growth into jobs.
Unemployment is a lagging indicator. So you don't expect to see unemployment to go down at the beginning of a new growing cycle. You expect the economy to grow, and then new jobs will be created, and finally unemployment will be lower, maybe 2.5 years ahead of now.
Unions say their anti-austerity message was also being aimed at German Chancellor Angela Merkel. She's expected to visit the country's prime minister on Friday.
The Japanese car maker Toyota has suffered another recall blow. The company says it's recalling 6.4 million vehicles. The recall affects nearly 30 different models manufactured as far back as 2004 and sold around the world. They're being called back to fix a variety of problems. Toyota says, though, that there haven't been any injuries or crashes in connection to these issues. The recall follows a $1.2 billion settlement between Toyota and the US government. This as American officials accused the car giant of making deceptive statements in connection to a previous giant recall. Let's take a quick look at the stock markets next. American stocks traded higher on Wednesday after the Federal Reserve released the minutes of its latest rate-setting meeting. Fed officials said that interest rates may stay low for longer to support the U.S. economy, and investors liked what they heard. Better than expected results from aluminium maker Alcoa were also seen to be helping out. The Nasdaq gained the most. It was up 1.7% at the close, and it now means that the Nasdaq is in positive territory for the year as a whole. European shares, they were also higher at the close, also inspired by those Alcoa earnings. We saw the CAC 40 here in Paris, for instance, trading higher by 0.4%. Let's take a closer look at some other news in brief. And car shares were in the spotlight during European trading, and partly due to record sales at BMW. The German car group sold almost 213,000 vehicles in March worldwide. That's 11% more than during the same month last year. The figure includes the BMW brand itself, compact mini cars, as well as high-end Rolls-Royces. Strong demand in Asia seemed to be fueling growth, but BMW's European sales are also heading higher. Luxury group LVMH has reported an unexpected drop in wine and spirit sales in the first quarter. The company owns brands like Hennessy Cognac, which has seen sales take a hit during a crackdown on lavish spending in China. At the same time, LVMH says its flagship Louis Vuitton fashion brand had an excellent start to the year, and overall first quarter sales grew by 6% to €7.2 billion, slightly above expectations. And the European Commission wants to introduce new rules on how top executives are paid. It's unveiled a draft law that would give shareholders a greater say on pay rises for bosses. EU Commissioner Michel Barnier says he wants a tighter link between salaries and a firm's performance. He says he's acting after some excessive pay packages had left a bitter aftertaste. OK, that is the business news for now, and it's back to you, Cyril.